Hi everyone, it's Lewis Smith here, and thank you for joining me in this module. Today's module is a bit of a different one. We have a special guest with us today. So Ben Sztejka from YourEcommerceAccountant.co.uk has kindly agreed to jump on and give us his expert tips and tricks when it comes to everything e-commerce accountancy. So Ben approached me a while ago about adding some value to the Dropship Unlocked members community with some specialist e-commerce advice. Ben runs a company called Your E-commerce Accountant, who specialize in, as you can see, eBay, Amazon sellers, Shopify, dropshipping, but specifically to the UK market as well. So, and something to mention too is if you stay around with us right until the end of this training session with Ben and myself today, Ben's got a very special offer that's exclusive to people in the Dropship Unlocked community. So if you're watching this video, you're part of that. Very worth your time staying with us until the end to see what you are entitled to. I know that there have been a lot of questions from our community that often I'm not best placed or even allowed to advise, but fortunately Ben is in the position where he can offer expert advice. And so, yeah, delighted to have you with us today, Ben. Thanks for joining.
Yeah, thanks for having me. So I'm Ben, and I'm obviously a chartered accountant and also an e-commerce seller myself. So I started selling on e-commerce when I was like 15, and I don't think there was even a name for dropshipping when I was doing it. But and then I found out, well, dropshipping, that's kind of what I was doing before. And I trained as an accountant, and I soon found that people just didn't understand Amazon, Shopify, and eBay. Accountants, they didn't understand the marketplace. It wasn't a traditional business, so you would get charged high fees because they saw you had 10,000 transactions, and they thought, wow, that's loads. We need to reconcile all those, and they charge you a high fee. But they also just didn't understand the marketplaces. So what taxes are involved? What are these fees about? What are payouts? And I soon found that actually there's a huge gap in terms of knowledge for e-commerce customers who need that expert advice, someone who can understand it. So in 2017, I set up Your E-commerce Accountant, and we've slowly built up a really good presence, and I think we're one of the few who can actually give a fully incorporated package of accountancy, from selling in the UK to selling in the US and the EU as well. So if you're a UK company, we kind of help you whatever marketplace you're in.
Thanks for that, Ben. So I've noticed actually that a lot of the members in our community find that sometimes they're the ones teaching their accountants how their business model works, which, like you said, it should really be the other way around, whereby the accountant is very familiar with the model, and that you can kind of just slot into their framework and their service offering as well. So great to know that there's a company like yours out there for all of us e-commerce sellers in the market. So Ben, I wonder maybe if you could take us through a little bit of information and some advice on how people get started with this, because a lot of the time people starting these businesses haven't any experience with this. Maybe they've worked as an employee for a company in the past, so they're not familiar with the concept of starting a business. Do I need to start a business? Can I operate as a sole trader? Like, how does that process work? What should people know? And what's your advice for getting started in that situation?
So one of the first things we see people struggle with is whether they need to register for a limited company, sole trader, or a partnership. And the biggest thing we actually see is actually that they're scared of a limited company. So it sounds really big. It's a big step, and you're like, wow, am I on the stock exchange? No. So we would always advise a limited company, and the real reason is because of firstly, it's a limited liability. So that means legally, if it all goes wrong, you are not personally liable for say the debts or any kind of litigation. And if you were a sole trader and you made any mistakes, maybe you forgot to pay a VAT bill, or you had a real issue with a supplier, that any debts would fall onto the sole trader, and that's you, and that would keep with you forever. So really, you should always do a limited company. They're actually not that expensive to set up. They cost £12 to set up, and they're really simple to actually do yourself. So if you want to do this yourself, you could go onto Companies House and actually register yourself. I know you had a video, didn't you, Lewis, of how to do it? So it's very much proven that you can do it yourself. But there's other ways of doing it as well. So you can also get a formation agent to do it for you. One of the main reasons to use a formation agent is because you get to use their address. This is so you can actually register on company's house, and that address is private. So you keep your private address private, and you've got a public address, which is a registered office address. Now, they'll forward you all your mail, but you have to remember at the same time, a lot of people will have these addresses, so they're not necessarily unique. And if a supplier gets 10 requests to be there, to sell on their behalf, they're going to question why are all these addresses the same. So there are sometimes better options out there. Maybe use an accountant's address, use a more obscure company which has got a different address, or use your own address, which is fine. But again, if someone Googles you and that's a house, then they might not think you're serious or big enough to deal with them. So that there is those issues. So you need to think about that before you kind of go ahead. And the other thing is you can actually change it whenever. So you might start off with your home, but you can change it day one to something else. So nothing is undoable. The other thing,
a quick question.
Go on.
So if I could ask just a quick question at that point, Ben, around how, if somebody is just starting out with their business, say they're thinking, right, I'm getting started, they're not ready yet for an accountant because they've made no sales yet, they're really just setting things up, but they want to have an address that kind of prepares them. I guess people can go and get an address before they're ready to actually sign up for an accountant. Is that right?
Yeah, so you can actually contact accountants. A lot of them do offer registered office addresses without actually registering for their accountancy services. All you'll need to do is just provide some ID, and you should, all people will ask for ID and proof to make sure we kind of tick off our money laundering processes. But yeah, you can normally ask any accountant to use their address. We regularly do that, and then people become clients later on when they're ready. So the other thing people ask is, what name can I choose? And people really get hung up on, like, my website's called, puppyblankets.com. I need to be called puppyblankets.co.uk limited. And actually, that's a bit of a fallacy. You can have any trading name you want. So you can call your company 1234 limited, and then have a website, puppyblankets.co.uk. That's absolutely fine. The only thing you have to do is kind of make sure you signpost your company number on the website. So yeah, hopefully that helps, and people don't get really worried about having to change their name if they change their website. You can use the same company if you jump onto a different brand.
That's something that we actually advise as well, to give future proofing and flexibility, and even room for expansion. If you decide puppy blankets is what I'm going to sell, but you register your limited company under a more generic name, say down the line you decide actually we might start selling kitten blankets as well, suddenly you're not limited. You can actually change the branding of your website without having to go redo the company, etc., all over again. So yeah, that sounds like a good piece of advice for people in this specific business model as well, where potentially the opportunity to pivot is quite frequent. So we had a quick question on this one. So one of our community members at Dropship Unlocked mentioned that they'd registered their company's house right at the beginning, and they chose quite a generic name. They've now chosen their niche, and they're creating their store around the trading name, I guess. But they chose a different name for their store. So Shopify are now asking them to verify their company name. So they said that they've sent them the certificate of incorporation for the limited company, but apparently they needed more to verify the business with some sort of documentation. Any idea on that one, Ben, on how best to verify the company name with a service like Shopify?
So when you sign up to Shopify or any other service, you should always sign up with your legal company name and not your trading name. They should ask that later on, but when they ask for business name or legal name, it's always the limited company name. And you can verify that by sending them the incorporation documents, which you can find on Company's House. And to kind of find those, you go on Company's House, and then you can search your name. And then when you go to filings or documents, you can actually download them and you can send them directly to Shopify. The other thing they will ask is, can we verify your address? Now that's going to be difficult, especially if you've used a registered office address. The document we would advise using is the HMRC document, where they are saying this is your corporation tax number or UTR. that document can be used to verify your address because it's proof that HMRC have got you on record, you live there. So that's probably the two documents I would use, and you should have no issues with that unless you've put a different legal entity name in Shopify or Amazon.
So we've got another question here from Hussein, Ben, if that's okay. And he said that he's recently signed up with Companies House for a limited company, so created his limited company, and has now been asked by HMRC for corporation tax code registration. So his question is, would I need to register for this now, or would I wait until I start trading?
If your intention is to start trading within 3 months of actually creating your company, then yes, you need to register for corporation tax, and that's so you can get your corporation tax UTR, and you can tell HMRC that you will be trading this year. If you're not going to trade in the next 3 to 12 months, then don't register for the corporation tax UTR. You'll be a dormant company, but you'll then have to, when you start trading, inform them anyway that you are going to start trading. So if you are going to trade in the next 3 months, do it. If not, you can leave it, but make sure you do it later. So the next thing people will worry about is when you scroll through, you've created your company, you'll scroll to the end, they will ask you, should I register for VAT? And don't sign up for VAT at this point. It's easy to click yes, but it's one of the most common mistakes people make. You'll be VAT registered from day one, and we don't want that. So you should always consider, should I be VAT registered, and have a real reason for doing it. So you have a 85,000 threshold, which you don't need to register for VAT until you hit that threshold. And then after that, you legally need to. So you have a choice right at the start to either register for VAT off the bat or wait for that threshold. So if you want to go ahead and do it before the 85K, you need a really good reason. So we've kind of looked at the pros and cons here of why you would do it early. So one would be, you can claim the VAT you suffer. So if you've got a supplier who charges VAT, you can reclaim that VAT. And then the next thing would be your supplier actually might want you to be VAT registered. So they might think, oh, I'm only dealing with someone who's VAT registered. And I think people get that a lot, don't they, Lewis?
Yeah, sometimes suppliers will ask on an application form, what's your VAT number? And I think sometimes there's a tendency to feel like if you don't have one, you're hiding something, right? But in my experience, certainly it's not been a problem to approach suppliers and just say, we're not yet VAT registered. Yeah. Just be honest and tell them, why would we register early?
Exactly. And I think the only thing there would be they might think you're a bit smaller than you are, but they can always check your company's house record anyway. So, it's not a big thing. And I think there's a lot of myths out there with people who kind of keep repeating the myth that you need to be VAT registered for someone to think you're really big. I mean, we're in the internet age now where that's not the case. So yeah, it encourages good practice as well. So if you start off VAT registered, you will have to keep decent accounting records, and therefore you will be better at it and have to get better at it. So it's good practice, and it makes it very serious. And yeah, and as I said, you can appear bigger, but it's a pinch of salt. The cons are probably higher than the pros at this stage. So you have to charge VAT at 20%, and then send that money to HMRC after you take off the VAT you've suffered from suppliers. Your margins will be eroded. So if you register for VAT, you have a period where you don't have to charge that 20%. You look more competitive, but also you kind of bank that extra money. And when you register for VAT, your margins are eroded by 5 to 10%. So it does matter, especially at the start when you're trying to build up the company. You obviously lose that threshold, so you don't have the ability to have that 85K of VAT free sales, and compliancy costs are higher. So you generally will need an accountant to do your VAT returns unless it's absolutely really simple and you've done this before and you're really au fait with it. But if you're not, it's worth getting an accountant involved to kind of do the VAT returns, tell you what you can and can't claim, and talk you through it. So there are a few cons involved there. I think really we would always recommend to wait until you hit that 85K threshold.
So just to clarify something on that one about the 20% con, of having to pay that to HMRC. If you, before you're VAT registered, if you are selling products that other retailers online are selling as well, and you've kind of been given an RRP to sell those products at, is there any, are you allowed to sell those products at the same price as everybody else, as long as you don't claim that 20% of that price is VAT? So essentially, you're on a level playing field with everyone else in the market selling it, but you're just not charging VAT. So therefore, you have 20% higher margin. Is that the correct thinking?
So yes, you can. So you charge the same amount of money as everyone else because that's an RRP, but you'd obviously be banking that 20% over everyone else. It's also good practice just to kind of build on that, to actually charge the same as others are charging and almost pretend you're VAT registered. Because then when you actually get over that 85k threshold, it's not a huge shock and you don't have to change your pricing structure.
Yeah, nice. So we've got a question from Basil here related to VAT, that he said, is there any benefit for holding on registering for VAT if I know that I'll be crossing the registration threshold in about 6 months' time, and therefore I will be registering then? I guess you've kind of covered that one in that there's no point registering before you're ready. So can people wait until they're at the point of 85,000 turnover to then register?
Yeah, they can. So you want to be waiting for 85k in sales, and you want to then register the month after you hit that sales record. So we'd always recommend not registering early, even if you think, in 6 months' time I'm going to hit that threshold. Don't register early. Wait. You never know what's going to happen. No one can predict the future.
So another question here from Amanda in our community, who said, I've been worrying about making a sale while I await my VAT registration to come through, but I've ticked not to charge tax on my products. So I just need to figure out how to process the order. Do I tell the supplier that I need to pay VAT on the order that I place with them? So I guess the question is, before being VAT registered, do you still pay suppliers VAT when they charge you for the order?
Yeah, I think there's two things here. So one is the supplier will always charge you VAT, regardless of your VAT registered. So it doesn't really matter to the supplier if you're VAT registered or not. You're always going to be charged it. The first bit of that question is probably the harder bit, which is you've registered for VAT, but you've not got your official documentation yet or your number. And that's the point where people think, well, do I charge VAT, but I can't because I'm not VAT registered? And the answer is you'll have to start collecting VAT from the date of registration, but you cannot put your VAT, you can't start collecting VAT by telling people you're collecting VAT until you've got that number. So you've got like a period of maybe 5 days where you don't know what to do. In that case, I would increase your prices to the price of inclusive of VAT, but do not claim you're charging VAT until you get that number. Then change the prices to include VAT, and then just make sure the prices are the same from then on.
Shopify make this quite easy, I think, don't they? With the checkbox that just says my prices do not include VAT, and like you said, you just hike them up to the 20% higher level at that point to make sure that you're still collecting the same amount. So
that's it. So when you finally are ready to register for VAT, you need to make sure that you have registered on the right date. So if you want to register from, say, the 1st of October, do not think you need to register from the start of your business when it was incorporated. Make sure you register from the actual date you went over plus a month. So this is called the retrospective method. And that means that if you hit 85k in, say, June, you're then allowed to register from the 1st of July for your VAT registration. So it's not, you don't have to register on the 15th of June because that's the date you went over. You can actually wait until the 1st of July, so the month after, to actually register. The other thing we see is you might get pushback from HMRC, and especially around e-commerce, and they will send you some questionnaires, and maybe just think that you're an overseas seller when you're not. We get that a lot recently. So with these things, we would say if you ever get a questionnaire, ring them up and go through it with them, because at the moment, especially, and it might change in the future when we get back to normal, but sending them an email or a letter, it gets lost in their system and they'll just cancel your VAT registration. So always ring if you ever get a questionnaire and go through it with them. So when you actually register for VAT, there's several schemes available to you, and I'll kind of just go through them here. So the first one is the accrual VAT scheme. This is the scheme which most people go for. I call this vanilla VAT, and it's the most common one. So you would be collecting VAT from customers, but also reclaiming VAT from suppliers, and it's the traditional input VAT, take out, output VAT equals what you'll pay to HMRC. And this system, requires a lot of admin. You have to use invoices from your suppliers to top this up, and it can be quite onerous if there's quite a high volume. The second one is the flat rate scheme, and this is really created for smaller businesses to deal with the admin of VAT. So the idea of it is to simplify VAT, and the way they do that is they say we are going to charge a set percentage on your gross revenue, and that's what you're going to charge send to HMRC for the VAT element. This is really different to the accrual base because you actually don't claim anything on your purchases. So when you actually get sent an invoice, you'll just pay the entire amount and not reclaim anything, because HMRC have allocated you a rate which assumes the normal percentage to reclaim. So it's in e-commerce sense, it's 7.5% is the rate people use for the flat rate scheme for e-commerce, and that's the rate you would use. The third scheme is you can use them in conjunction with the other schemes. It's the annual scheme, and that's when it's kind of it's similar to the self-assessment where you do it once a year. You do your VAT once a year, and HMRC will send you estimates for you to pay up until that point, and then they'll revise that at the end of the year. We don't really advise this one. I think it's the same amount of work, and HMRC can get it wrong, and you start paying more tax than you need, or it's just not accurate, and I don't think it saves much time. So there's not much point going for the annual scheme, even if it does sound a bit more simpler. It's really not. It's better to do things either quarterly because you remember what you're doing, rather than a year later when you're like, well, where's that invoice? So stay away from that one. I'd probably recommend. And then the final one is a cash versus accrual. So cash versus accrual is if you do cash VAT, you will only reclaim and pay VAT when someone physically pays you or you physically pay them. So the example being, if you sell something today and then you purchase from the supplier the item you're going to send to them, but then you actually pay them a month later, you'll recognize the VAT a month later. So there'll be a bit of a mismatch, and it might impact your cash flow. And it's good if you do want to actually reclaim your VAT up front and then pay it later, because it does stagger it a bit, but it'll become disjointed quite quickly. Whereas the accrual scheme, you can reclaim the VAT as soon as you get the invoice. And that means you kind of know where you're at, and there's no hidden tax bill later on, and you can very much link it to your sales.
Yeah. So I guess something that when people are first getting started in this model of domestic UK dropshipping, a lot of the time, especially if they're a new company, the supplier won't give them credit terms, right? They'll be on a pro forma cash account. So it can be quite simple with the cash accounting, because the day the income comes through from the customer is probably the day you also pay the supplier. So it's all very simple. But we certainly found that after a while, when you're on net 30 or net 60 terms with the supplier, and you've made a lot of sales in one month, but then you don't pay them until after the end of the quarter, suddenly things get very confusing unless you start to reconcile and move to, I guess it would be the accrual version. Would that be correct?
That's it, yeah.
So something to be aware of for cash flow reasons, because that can hide problems in the business quite easily. I think if you look like, oh great, it looks like we've made loads of money this month, and then suddenly you get stung with a really big VAT bill the following month when you do pay the supplier eventually.
Yeah. So what does VAT look like when you start charging VAT, and how will it kind of change your profit margins? So I've kind of taken you through an example here. So when you're not VAT registered, you would charge the customer, say, £600, and all of that is revenue. And then you'll also then pay for the item. Let's say it's 300 quid, and again, that's all costs. So 600 minus 300, that gives you £300 profit. Super simple. You don't have to worry about VAT. You have been charged it by the supplier, but it's basically a cost because you can't reclaim it. So your profit is just 300 quid. The second part is when you actually do register for VAT, you'll still charge that customer £600, well, in this example anyway. But of that, you'll have £500, which is revenue, and £100 of that is VAT. And that £100 needs to be sent to HMRC. And then when you purchase from your supplier, and assuming they're VAT registered, that £300, £250 of that is cost of sales, and £50 of that is VAT. So that's what you can reclaim from HMRC. So then what you've got cash-wise is the same, 300 quid, just like the first example. However, the profit is actually 250, because if we have the 500 minus the 250, we get 250. So your margin has been slightly eroded there when you've VAT registered. And at the same time, that difference between the £100 and the £50, £100 being the one you collected from your customer, and £50 is the one you paid to your supplier, you then owe £50 to HMRC.
That makes sense. So that, in a nutshell, I guess, is the reason why you shouldn't register for VAT before you absolutely need to, right?
Exactly. You can see here you're losing £50 off the bat, but it's also an example of where actually we're charging the customer the same and we're paying our supplier the same. And as long as you kind of think about it up front and maybe do this calculation when, even before you're VAT registered, you can make sure that, okay, when I am VAT registered, at least I'll know I'm still making a profit of 250.
Yeah, absolutely. And I guess the question that people might have is, with the profit then, so the end result there in the first example, 300, and the second example, 250, on that profit as a limited company, you would then still pay your corporation tax as usual, right?
Yes, that's a good question. So in the first example, you'd pay corporation tax on the 300, but on the second example, you'd only pay corporation tax on the 250. So the next thing I should take you through is the flat rate scheme versus the normal VAT scheme, or the accrual VAT scheme. And this is something people don't really look at and don't really think about until maybe it's too late. But if you know about it before, you can then actually do the calculations, or ask your accountant to do the calculations, and then figure out which scheme is better for you. So the normal VAT scheme is, I'm using the same example as before. So we've charged the customer 600, we've paid our supplier 300, but we've also collected VAT of 100, and then paid £50. So our profit is £250, and we owe HMRC 50, just like the last slide. And I've also added what margin we've got here. So 42% is your margin here. But when we look at the flat rate scheme, so the flat rate scheme being, we do not look at what we've suffered in terms of VAT, i.e. what we've paid to suppliers. We only look at our revenue, and then HMRC have given us a set percentage, which in your case will probably be 7.5%. And that's how we're going to, it's almost like an estimating what your VAT should have been. But you can use this to your advantage, and you can actually work out if actually the flat rate scheme is better for you or worse for you. So in this example, we've got we're charging the customer £600 again. Again, we're technically £500 revenue and £100 VAT. That's what we're going to send to the customer. So if they ask for a VAT invoice, it'll be exactly the same as the normal VAT. We do not tell them that actually we're on a flat rate scheme or it's 7.5%. You would still send them £500 revenue and £100 VAT. So if they are VAT registered, they can reclaim that. We then obviously buy our product from the supplier for £300. And again, we can't claim VAT back here because the flat rate scheme doesn't allow it, because we're estimating the VAT. So it's almost like you're not VAT registered again, but you can't claim it. And you might feel like, well, am I losing money here? And this is why we're doing this calculation here. So then again, we've got the same amount as cash, which is 300. But then when we calculate what's owed to HMRC, we have to take our gross revenue, which is the £600, and we times that by our flat rate. And in this case, it's 7.5%. And then you get £45 you owe to HMRC. So if we compared that to what we would have paid in the first example, we're paying £50 in the first example. We're now only paying 45, and our profits increased by £5 as a result, and our margin's 43%.
Which might not sound like much, right? But it can make a big difference scaled up across thousands of orders.
Yeah, exactly.
So if somebody was in the position where they weren't sure which of these was going to be the right one for them, they wanted someone to kind of sense check their business, run the numbers for them. Is that something that somebody can reach out to you for if they're at those initial stages of wanting to find out what's best for them and getting help actually having that set up for them?
Yeah, I'd always recommend talking to an accountant probably before you become VAT registered, so they can run these checks with you, make sure that you've got the right date for one, that you're on the right schemes, and that in this case, very specifically to e-commerce, that actually you can actually get it working for you to register for flat rate. Because if you're on a lower margin, flat rate doesn't work. But if you're on a higher margin, 40 to 70%, then flat rate really does work. But you always need to do the calculations. So yeah, get in touch and we can help you with that.
Good to know. So Ben, quick question for you. What are the reasons that someone would choose the flat rate scheme for their business?
So you've got this reason here, which is obviously financial. So you can work it out and actually work out that actually I'm saving money and I'll pay less VAT. But there's other reasons as well. One, it's obviously you can see example 2. It's very simple. You just multiply one number by another number and there's your VAT, and you don't have to keep as many records. But it's also good if you buy from, and this probably is very rare, but if you buy from customers, suppliers even, who do not charge VAT, then it's actually beneficial to be flat rate. So if you've got a large amount of your customer base, supplier base, which is not charging you VAT, then this scheme will actually help you out exponentially if the more you use suppliers which don't have VAT on it. So again, that's why you want to calculate it to see the mix, and you can really figure out if it's worth it for you. So the other thing we get a lot of questions on is invoicing when VAT registered or when not VAT registered. Invoicing can be quite tricky, especially if you're doing B2B invoicing. B2C is less important because someone's more interested in getting a receipt than an invoice, because they're not going to be claiming VAT. But a business wants to see that VAT invoice because they're going to use that to claim VAT back. And if they haven't got the right documentation, they're going to hassle you until they get it, so they can claim back that VAT. So if you're not VAT registered and you cannot send out a VAT invoice, so if someone asks you, I need a VAT invoice for this, you say, no, we're not VAT registered. Here's an invoice, it's got no VAT on. You can't produce a VAT invoice. You can't pretend you're VAT registered on an invoice, because you just can't do that. It's not legal, and you're not charging VAT, so they can't reclaim it. But when you are VAT registered, you must have, if they request it, send them a VAT invoice. And now the VAT invoice, there's no pro forma, there is minimum requirements you need to do. So you'll need to have your VAT number on there. You'll need to have what percentage VAT and the amount on there as well, and along with your address. So they're the minimum things you need for someone to claim VAT and for it to be a valid VAT invoice.
Nice. And there are some apps, I think, in Shopify that make this process quite easy, to just be able to do that. Like you said, certainly if you're in a B2C niche, this request is a lot less common. But when you do start getting some B2B customers asking for this can become quite a common one. So it's something to just create a system in your business whereby you can send a VAT calculation on an invoice PDF, email it to the customer, and should keep them happy. So yeah, sounds good.
Yeah, I think the other thing people do as well, if you're not actually sending out that many VAT invoices, you can always use an Excel template you can find on the internet and send it out that way.
Brilliant, yeah. So we had a question here from Liam in our group that said, I had a customer request a VAT invoice, but I'm not currently VAT registered. So his question was, should I create a VAT invoice and send this through? Any recommendations on how to do that? Or should I state that I'm not currently VAT registered and so I can't produce a VAT receipt?
Yeah, so I think that's a really good question. I think people get really worried about this. I think you should always, if you're not VAT registered, not send out a VAT invoice. If you do, your HMRC are not going to be too pleased with you. So don't do it. If that happens, you just say, look, we're not VAT registered. We cannot issue a VAT invoice. So that's it from my kind of main points I wanted to make. But have you got any questions from the community we can go through?
Yeah, so we've got a few questions here from people in our Dropship Unlocked community. We've got first one is from Caroline, who said, when is the best time to get a business bank account? And is this a requirement?
Yeah. So yes, you should get a business bank as soon as you register the business as a limited company, or if you want to kind of head out as a sole trader as well. So that should be one of the first things you do. There's the question of, do I legally need one? From a terms and conditions point of view with a bank, yes. So banks won't allow you to use a personal account when it's actually for business activity. You'll notice that you'll pay to use a business bank account, whereas personal accounts, you don't really pay anything. So the bank has got an issue with that. Legality wise, I don't think it's not legal. I think that's a myth. But from a terms and conditions point of view, it's very much frowned upon. But that doesn't mean you can't use your personal card for some business expenses. So you can always, if you needed to, spend money on that card and then recharge it to the company, and you do that by introducing a director's loan. So anything you spend on your own card would be classed as a director's loan to the company, but still a valid business expense.
Great. Thanks for that. So another question actually from Caroline, and a similar question from Richard as well. So I'll try and combine these two questions the best I can. The questions really center around, so you're a director now of a limited company, you're making some money, you're generating sales, but how do you actually pay yourself? And also some concerns around if you're running this company alongside maybe another source of income, maybe you have another company, or maybe you're also an employee for a company and you have a salary, how is this going to affect your tax bracket? Is it going to change the amount of tax you pay? So yeah, first part, I guess, how do you pay yourself in the most tax efficient way? Second part, what does it do if you have other income sources as well?
Yeah. So really what we see is people start this off as a side business where they're maybe working already and that they're already on payroll. So you think, oh, is that going to impact my tax code? Will it, will my boss be informed by HR that I'm doing a side business? And the best thing to do in this case is to any profits when you're employed by someone else, and you really don't want them to know, is to take all your profits via dividends. So you take anything you want to extract out of the business, you declare a dividend, and you declare that on your self-assessment at year end. You have £2,000 of tax-free dividends, so you should always be using those up every year. But that's the main way we'd use if you're kind of continuing with employment elsewhere. Whereas if you're not employed elsewhere, then the best and most tax efficient way is to set up a payroll for the company and then pay yourself a minimum amount to ensure that you're still contributing to national insurance without actually paying the national insurance itself. And then that's tax allowable to reduce your corporation tax bill. And then the remainder after corporation tax is then paid via dividends. And that's the most tax efficient way of extracting profit from the business. Running a payroll is surprisingly difficult in terms of just admin. You have to register for payroll and then run the payroll monthly. You can run it annually, but again, you'll probably need an accountant to at least advise on how to do this.
Is that something that you would be able to assist with as an accountant if someone needed to set up payroll and they didn't fancy taking that task on themselves? Is that something you can do for them?
Yeah. We help everyone with basically anything, ranging from registering their business all the way up to payroll. So we would always recommend a payroll to our clients, and we'd always set them up a payroll if they are going full time on their business.
Perfect. Yeah, that's great. So I guess the point about dividends, actually, that's an interesting one that people sometimes ask, and I think sometimes even overcomplicate it, is when you say you can pay yourself a dividend, how does that actually work? Is there some special dividend portal you have to go through, or is it just as simple as a bank transfer with the reference dividend?
Yeah, it's in between those two answers, really. So it's basically a bank transfer with you saying dividend on it, but it also needs to be accompanied with a dividend voucher. So a dividend voucher is a form which you fill out, you sign, and you say that we're declaring a dividend. This is how many pounds we're going to pay per share, and these are the people who are going to get the dividend, and you have to sign that off and date it before you kind of send the dividend to yourself. So they're the two things you need to worry about. Is one, make sure you kind of call it something logical so you know what it is on the bank, but also you do need to make that dividend voucher. But you don't send the dividend voucher anyway, you just keep it for your records. And I don't think I've ever had a client be asked for this from HMRC, but you should always keep it in your records, so you should always do it.
And with dividends, my understanding is that if you have multiple shareholders as part of your business, so not necessarily multiple directors, but shareholders, that the dividend amounts need to be split in proportion to the shares. Is that right?
Yeah.
Can you clarify how that bit works?
So when you declare a dividend, you declare the dividend per share, not per person. So if you say you've got 100 ordinary shares and you're going to pay £1 per share, and Dave has got 50 and Darren's got 50, they'd both get 50. So you'd have to pay the same. So you can't just say, no, Darren, you're getting £2,000 and Dave, you're getting £1,000. You have to do it in proportion to the share ownership. The way people get around that is maybe having a different class of shares for different shareholders, but then that gets very complex very quickly. We would say if there is any kind of effort gap, you would reflect that in the share ownership of the business. So someone's going to only get 30%, they should own 30% of the business. If someone's going to get 70%, they should own 70% of the shares.
Got it. And I guess something as well to ask on that, and that this isn't a question from the community, this is one from me, it is around company expenses and where dividends fall on a balance sheet. Because I think sometimes people think, well, if I pay myself a dividend, I can then reduce the amount of tax I pay as a company. But my understanding is that dividends come as a remainder of the share of the profit that remains after tax. So can you talk about some things that company owners and directors can do to reduce their corporation tax, things like pension contributions or other expenses, maybe even things if you're running a business from home? What kinds of things can company directors do to minimize the amount of tax they pay, even prior to taking out that dividend?
Yeah, so you're absolutely right. So dividends are taken out after corporation tax, and they're an expense after corporation tax. But what you can do to reduce your corporation tax, and there's no magic bullet here. So if you think you're going to get an accountant who's going to magic away your tax, they're not out there, and if they are, I don't think they're doing it correctly. But what you can do is do the right thing. So you rightly said pension contributions. So you can make a pension contribution directly from the company to your pension provider, and that will be tax allowable. So that means it'll be able to be taken away from your profit, and therefore your corporation tax will be lower. Other areas are home use. So if you're working from home or use a percentage of your house for the business, then you can claim a percentage of, say, your utility bills, rent, mortgage interest, heating, and use that as a valid expense to then reduce your corporation tax. There's various other little things you can do, like maybe run a payroll. So we mentioned that earlier, but running a payroll actually means that's even though you're paying yourself, it's seen as a cost, and it's taken before corporation tax, so that's also tax allowable. So,
and what about electric cars?
So electric cars, you can. Well, to save pure tax, not buying something is always better than buying something, right? So you're not going to be making money.
I'm going to save
You're not going
money
to save
by
money
doing it, but you might save. Yeah.
Exactly. But electric cars, they are tax allowable, and you'll be able to claim the full amount on those.
Amazing. So that's a nice big way. If you're going to buy one anyway, it's a great way of reducing your tax, right? I guess you kind of have to view it as almost like a discount on things that you were going to buy anyway, rather than, like you said, going and buying it for the sake of saving, because you'll end up spending more.
Exactly, and I think that's the best. And like with the benefit in kind as well, you have to do some research with the car you're buying and see what the benefit in kind is for the company to be basically lending that to you for your private use. So electric cars are very cheap on benefit in kind, and there's basically no tax on it. Whereas if you buy a petrol car and effectively lease it back to yourself, then there is quite a high tax amount, and actually it's not worth it. You may as well buy the car separately and then recharge the company your mileage.
Got it. So next question was from Basil in our community, who said, I applied for VAT registration a couple of days ago and received an email with a questionnaire to fill from HMRC. The questionnaire is one for overseas traders, which I find strange. Anyone had anything similar?
So yes, I have seen it, and it happens actually quite a lot. And it seems to happen like buses. You see one, and then you'll see five. And I don't know why that is. Maybe there's one person who's approving VAT registrations at HMRC, and they just decide to ask these questions. But what that is for is, if you're an overseas seller, you normally get asked these questions to make sure that you're doing the right thing and registering for VAT at the right time. And what seems to be happening is e-commerce sellers, if you don't give them enough information, or maybe you're quite vague, they're going to assume you're an overseas seller and send you out this questionnaire. So what we'd always say with this is, one, fill out that form as best as you can, send it back to them, but follow it up with like an immediate phone call, asking them have they received it, and if we can get this moving on the phone. Because if you don't, you're going to be stuck and you're going to be waiting, and in some cases HMRC might not get the email. They've got quite a decent firewall which blocks a lot, so they might not get the email if you sent it via letter. Especially now, they're not monitoring letters that well, and they've got a huge backlog. So you should always ring up and say, look, I've received this, here's the reference number, and can we kind of get this resolved on the phone? And you might have to go for a few people before you find the right person, because again, it's quite hard to navigate via HMRC's phone line, but it's worth doing and sticking with, because you'll get the result quicker.
Yeah, and I guess it's something you've only got to do once, right? Is that hoop you have to jump through, and then you never have to revisit it, hopefully.
Yeah.
So another couple of questions from Daniel and Rosie. Quite similar questions, so I'll just see if I can try and combine the two. But they center around a theme, and this time it's international sales, so selling into Europe mainly. Now, part of the question is around if you have suppliers who are based in the EU who you maybe want to buy their products at trade as a limited company and maybe sell them into the UK. How does that bit work? Should they be charging you VAT? Is there some kind of other way you do it when dealing with those suppliers? And the other one is selling to customers outside of the UK. So maybe the first one we could tackle is, what if the supplier is based outside the UK in the EU? How does that bit work when it comes to taxes?
Fine. So if you're buying from an EU supplier and they're sending it to the UK, they are not going to charge you UK VAT unless they are registered for VAT specifically. And if they're not registered for VAT, then when it gets to the border, the customer will be charged VAT by customs, or they won't release the item. So you could have an angry customer if this is the case. So what you want to do is check with that supplier to make sure, one, are they VAT registered, and two, can they prepay that VAT if they're not VAT registered? And if they're not, you should at the very least inform your customer that's going to happen, or pay the VAT yourself.
Got it. So this, I guess, is what when you hear people talking about needing an EORI number, is this something that would be required for you as a retailer your supplier is based in the EU bringing products into the UK, right?
Yeah, so you need a URI number just to kind of facilitate the import export, but there'll be additional schemes such as the ISS scheme to import that item with VAT paid already.
Got it. Okay. And so say you're running the business in the UK now, so you're a dropshipper in the UK working with UK suppliers, and then somebody in mainland Europe decides to purchase from your store if you have it set up in Shopify to allow that, or even if you intentionally expand into Europe, you want to start selling there, running ads there. How does that bit work in terms of what should you charge customers there?
So again, very similar. So you're just kind of flipping around the problem. So if you sell to a customer in the EU, again, you won't charge them VAT unless you're registered for VAT in that country. So if you're selling to France and you are registered for French VAT, yes, charge them French VAT. If you're not, charge them nothing. And again, you want to check with your supplier again and say, look, have you got a French VAT number, or have you got the ISS scheme to get it into the country without incurring any kind of charges? And if they have, then you can just send it off and they won't get a VAT bill. But if you're not in any of those schemes, they will get a VAT charge.
Got it. Makes sense. So next question is from Corey in our community, who said, I've recently received a mail addressed to my company by the Information Commissioner's Office, or ICO for short, stating that the businesses need to pay a fee of between £40 to £60 per year under the data protection regulations of 2018. I completed the fee checker to the best of my knowledge to see whether I'm exempt or not, and it says I am, but I'm worried I've incorrectly answered one of the questions as a result. Has anyone else been through this process? Could you talk to us a bit about that, please, Ben, the ICO and how that works?
Yeah, so it's not something I'm expert in, but it's something I see a lot and therefore have had to learn about it. So the ICO is there to make sure that you're using customers' information correctly, and you'll receive this letter once you create your company, because obviously you've signposted that you're selling to customers. You're a business, so therefore you might have to pay an ICO fee, which means that you're going to look after customers' data. What the first thing people notice is this a scam? I've just been sent a letter. It's for £40. This letter it's very short, very part. I've never heard of this before. No one's ever told me about the ICO, and it's not a scam. So you can pay that, and yeah, you can do the questionnaire to see if you're exempt or if it's £40 or £60. And most times you should be exempt, but go through the questionnaire. It's going to depend on how much customer data you've got on record, and how long you keep it for. It's going to depend on if you pay the ICO fee or not.
Got it. Thanks for that. So Ben, we had another question from somebody in our community asking about the steps they need to take when getting set up. So they're thinking that they need a registered business address, a director's service address. Maybe they're not quite ready for an accountant, but they know that they need an address and somewhere for company mail to be sent. So do people need to go to a formation agent and then look at getting an accountant, or is there kind of one place where we can just get this all done in one stop?
Yeah, that's it. So I think a lot of people go to formation agents because they see it as quick and easy and cheap. I think after the first year, these services get quite expensive. And as we said in the previous slide, they're not actually that unique addresses. Plus, we've always had problems with have they received the letter or not? Have they sent it to me? And it can be, you just don't know. So you can come to an accountant like us, and we will offer you a registered office service, create the company for you, forward you the mail, have a unique address, and we can offer that before accountancy fees, because we try and be a one-stop shop from cradle to grave for e-commerce companies. So if you're from starting out all the way up to 10 million in revenue. So we have quite a few clients who just are using our registered office, and they're kind of they're not ready for an accountant yet, and we wouldn't want to sell accountancy services for someone who doesn't need it yet either. So we would, if you give us a ring, we can always set up a registered office for you without having to jump right into the accountancy fees.
Sounds good. Yeah, I think that's going to help a lot of people, certainly in our community, who are just getting started, who maybe don't yet need to commit to a full-blown accountancy service because they don't have the volume of sales yet to warrant that. But they do need some initial pointers and advice on that. So Ben, the next question we often get from people in our community as they start to make sales and they start to realize that they've actually built an asset here and a business that's generating money is, when's the right time to get an accountant? When do I need to speak to one? How much should I pay one? Should I pay them monthly? How does that work? What's a reasonable fee? And so those are the typical kinds of questions. So maybe could you talk us through a little bit around, when to know if it's the right time to even get an accountant?
Yeah, sure. So when looking for an accountant, there's some key things you need to think about. So the first one is, when do I need to get an accountant? Now, some people will say you need to get an accountant day one, and you need to get one as soon as you make a limited company, or you're going to make mistakes. I don't really buy into that. I think you need to focus on the business first. So obviously you've created your limited company yourself. You might have used an accountant for a registered office, but you don't necessarily need the fees because there's nothing they're going to do yet. So we'd always say, when you're looking for an accountant, as soon as you realize that this is something long term and it's okay, this is working, we're growing, that's the point I would get an accountant. So it's kind of when you feel like this is going to go somewhere, because then you can actually use the accountant to kind of help you grow. Whereas if you're just kind of feeling things out, there's just no point at having an additional cost for someone who's probably not going to give you that much advice yet. But yeah, definitely when you think it's going to kick on and continue, and definitely before you hit 85k. So if we had a revenue mark on this, it'd be around 60k would be when you kind of contact an accountant and say, look, here I am, I'm at about 60k revenue for a 12-month rolling period. Can you help me, talk me through when I need to register VAT? And that's probably the best time to do it.
And just a quick question on that. Can an accountant help somebody if, say, they're coming up to their first year end, but they haven't really got started yet for whatever reason, life got in the way, or they just have been informed that their accounts will be due soon, but they're not ready to pay an accountant monthly? Is that something that an accountant can help with on a one-off basis, just to submit the accounts?
Yeah, exactly. So the key thing is monthly versus annual. So monthly would be, you have an ongoing relationship with the accountant, kind of monitors what you're doing. They're doing your bookkeeping, helping you out on the VAT returns. But actually, if you're not kind of there yet, and you don't really need an accountant immediately, but you've got an annual report coming up or a corporation tax coming up, then you're like, oh, I need to do this. Then we would recommend doing like an annual fee, where you kind of ring up an e-commerce accountant and say, I've got my accounts due. I've not made any sales, or I have made sales, but they're not really significant yet, maybe next year. And then, you get a one-off fee, and it'd be, a one-off filing fee. And it should be simpler and quicker than going for a monthly retainer with an accountant. So the next thing you need to decide is, what type of accountant do you need to go for? So we see there's all sorts of accountants out there. You've got them on the high street. You've got accountants who do everything. There's accountants who just do building, just do dentistry. And really, you should always go for a specialist when you kind of find your accountant, because they're going to know, one, how to do it efficiently. So it doesn't necessarily mean it's going to be more expensive than a normal accountant. It might actually be cheaper. But also they'll know exactly what you're dealing with. So you don't have to explain to them what is dropshipping. You don't have to explain to them what is Shopify. How do I go into Shopify? You don't have to kind of teach them how to account for your business. And that's what we find, not all of them, but a lot of them, where people go to, say, a high street accountant, and they will have to then train them how to do their accounting for them. And that accountant on the high street will be like, well, I don't really understand this business, so I'm going to charge them more money because I'm going to have to spend more time researching it. And that's how it works. So we'd always say, go with a specialist. How much should you spend? It really depends. It depends on how much interaction you want. So if you want a bog standard filing service where you send them invoices and you don't speak to them ever, and you just want, say, a VAT return done or a corporation tax done, and you don't really want to be talked through it, you don't want any advice, then you can get these services quite cheap. So, say £50 per month, or to £100 per month. And for those, you need to know what you're paying for. Though you're paying for just someone to file it, and you're not going to get any kind of value add, and they might not even check it to the extent as if they had spoken to you either. So they just assume what you've sent them is all you've got. They're not going to ask for anything more, or anything less. And then you've kind of got an accountant who's going to really help you and kind of give you value add advice, and you have to pay a little bit more for that. Obviously, you can talk to them more. Ring them up, email them, talk through any VAT returns, and say, look, really lead me through this process and really help me out. And I would recommend that for anyone who is not absolutely 100% sure on doing all the compliance themselves. So if you're really strong on that compliance stuff, maybe you're an accountant or got a background, then just a filing service will do. But really, you want to focus on someone who's going to give you what you need to kind of take away that burden. And I think you're going to be paying between £100 to £200 per month, depending on how big you are, when you want a service like that. And I think that's something you want to go with if you want to kind of outsource all the problems. And I think that's really it. I don't know if you've got any questions on kind of this slide.
No, I think that the way that I always think about it with accountancy in this kind of business, like you say, a specialist accountant, is that a good accountant should save you money rather than cost you money, right? So a good accountant effectively will make you more money by having them doing what they're doing, working, optimizing your tax efficiency and personal tax efficiency, both as a business and an individual, more so than if you were trying to do it all yourself. Not to mention the stress that an entrepreneur has to take on by trying to figure this stuff all out themselves, as well as the liability. I just think it's a no-brainer for somebody who's getting their business up and running to go with a specialist accountant such as yourself. So I think that sounds good. So how would people in our community or watching this video who've learned about your services at Your E-commerce Accountant, how would they actually reach out to you? And is there anything special that you're able to offer them for having seen this video?
Yeah, of course. So what we can do is, the best thing to do actually is to book a free consultation call with us at obviously our website, YourEcommerceAccountant.co.uk, and that's half an hour of chatting with someone like me or me, and at the very least you get some good advice. We won't take any client on who doesn't need accountancy services, so you have to worry about being led down the wrong path. But it's a time for you to really talk to someone to kind of figure out what you need to worry about, and maybe solve a few issues quickly on the phone before you then think, okay, we need to go on with accountancy services. So yeah, book a consultation call there. And if you are in the market for an accountant, we can offer 1 month free if you quote Dropship Unlocked. Either email that email directly or just drop it into the conversation when you book a free consultation, and we can do a month's free accountancy services.
Nice. We appreciate you looking after us and our community, Ben. That's much appreciated. So that's going to help anybody who's just getting started with this and wants their first month of accountancy for free. I mean, definitely worth doing. So that sounds great. Well, thank you very much for joining us today, Ben. Thanks for all of the advice and sharing all of your expertise when it comes to everything e-commerce, accountancy and taxes. I know that we probably only just scratched the surface when it comes to some of the more in-depth stuff that we can do, but we can only fit so much into one of these conversations. So I guess the best way for people to reach out to you next would be to use the email address you can see on the screen here, and then book in a time for that free 30-minute consultation call with yourself, right?
Yeah, that's it. I think, yeah, you're right there. This is definitely scratching the surface, and it can get more complex as it goes on.
Brilliant. All right. Well, thank you very much for your time today, Ben, and take care. Speak to you soon.
Cheers. Thanks a lot, then.